After nearly 2 years of drops, today the annual inflation rate remained the same at 2.2%. While lower petrol prices helped to alleviate cost pressures, rising rents were the biggest contributor to the unchanged inflation rate. As Zane Spall reports, there was also a spike in some food prices.
Michael Lamb imports and sells premium extra virgin olive oil.
So, for example, Corotina from Italy. This is a high polyphenolic olive oil.
It's a product that, compared to a year ago, is about 45% more expensive. And there's a reason for that.
In 2022 and 2023, Spain had a bad harvest. There was drought, there was a heat wave, and droughts and heat waves. So the spot price for a commodity olive oil went up a lot.
The average price of 1 litre of extra virgin olive oil is now more than $22.
The good news is those prices are probably going to trend down now, following good harvests at the end of 2024.
But olive oil is just one component. Overall, food prices increased by 1.5% in the 12 months to December. And it's not just the rising cost of some food items putting pressure on household budgets. Today's update from Stats NZ showed rent prices increased by 4.2% in the year to December, making up almost a fifth of the 2.2% annual inflation rate. That 2.2% figure is unchanged from the previous September quarter update. It's the first time in nearly 2 years that the annual inflation rate hasn't dropped.
I think the really important thing to watch is what happens to the New Zealand dollar. A lot of our food is imported, and with that dollar dropping, we could see food prices pushing higher over the year ahead.
And while the inflation rate of 2.2% is still within the Reserve Bank's target of between 1 and 3, the domestic inflation rate is sticky at 4.5%.
There are components to this data that we want to see coming down. Rents are one of them. The other one I'd pick out is rates.
Domestic inflation is being held up by some certain prices, like rates and insurance. But under the surface, the soft activity we've seen over the past year is pulling down a range of domestic prices. That'll be really important for a lot of households over the coming year.
Households under less financial pressure is what business owners like Michael Lamb hope for.
We launched 6 months ago, so it was probably the worst time to launch a premium product into the New Zealand consumer food space. But I thought if we can survive this sort of so-called downtime, we'll probably do okay when things get better.
Extra optimism that better economic conditions will increase demand for these extra virgin olive oil products.
OK, Zane, we know that the inflation rate has a huge bearing on the official cash rate. So how will today's figures impact the next review in February?
Well, Sam, I've been looking at some of the commentary since this data was released this morning. And the general consensus among economists seems to be that despite those cost pressures mentioned in my story, it is expected that the Reserve Bank will proceed with another 50 basis point cut to the benchmark lending rate next month. Brad Olsen from Infometrics, for example, said inflationary pressures appear to be, quote, generally contained and domestic pricing pressures are gradually easing. Now, Westpac Bank had expected a drop in the inflation rate, but Satish Ranchard, the economist in my story, he also told me he is expecting another 50 basis point cut next month. We'll find out for sure on the 19th of February.